Hello everyone to the second video of this mentorship, and today we will be explaining quite some things, and this will be probably a longer video. So the first thing I'm going to suggest is that please watch this. The first time you watch this video, sit in your hands, just listen, focus, and then the second time I would suggest you take a notebook and then take every note. And then before you move to the next video, I want you to go back to that notebook and just read everything you wrote down. So whenever something is important, whatever I'm talking, please just write it down. For example, let's say now I'm gonna explain candlesticks, and whenever I say something that is important about candlesticks, you want to write that down. For a new guy who just came here, I mean, not just came here, but for a new guy who just started trading, this can look confusing, right? What is these are candles. At least that's what it's called, because they look like candles, as you can see. So this right here, you want to have this clicked. You don't want any of these, you want this click, you want these candles. And if you want my chart layout, if you want your chart to be looking like mine, you're gonna click twice here, and then these are my settings on everything. This here, this is black, this is this color. Just pause the video whenever I'm clicking on something, and you will do it on your own. This canvas, it's solid. The color is this one here. If you want to have the background a little lighter, I don't want this purely white because that's just a little harsh for your eyes. Grid lines none. This is solid. This is how you want to look at everything else. Alerts, events, canvas. So you can just go ahead and copy everything here, and then your chart will be looking quite the same. And when you want to trade the gold, like I said in the first video, you want to trade this gold, this FX. I think it's XAU USD. I think it's this one, yeah. You want to have XAU USD spot, commodity CFD from this FX CM. And I took this other one just so I can, because in this one, this is what I trade. I have my zones marked out, and in this one, I just want to do like the drawings and stuff and explaining that I want you guys to understand. So, what are candles? We only have two types of candles, a buy candle and a sell candle. Like for example, every green candle you see here represents a move up in the market. And every black candle you see here represents a move down in the market. If you just open TradingView, like maybe a day ago, 2 days ago, whatever, you would see that by default it's green and red. And if you want to keep it that way, that's totally fine. I just like how it looks this way. So how do these work? On top of all of this here, I want you to copy every time frame like I did. I want you to store all of these, which I have stored here. Yeah, like this. The 1 minute, 2, 3, the 5 minute, the 15, the 30, the 1 hour, the 2 hour, 4 hour, and the daily. This is all the numbers you're gonna need. And what are these? Now, let's click onto the 4 hour. If we click on the 4 hour, we can see that something changed. Like if I press on the 50 minutes, something is changing, right? So let's stay on the 4 hour. What does this mean? This means that one candle here, for this candle to open and close and then go to the next candle, this took 4 hours. And if you go to the left, we can see how many minutes or hours is left for this candle to close. So we have 21 minutes and 44 seconds now left for this candle to close, which means this candle has been open for like 3 hours and 39 minutes, something like that, and it only has 20 minutes to close. So this candle here to form and then to go to the next one, it took 4 hours. We can just go down time frames and then go, for example, let's say 30 minutes. The same exact thing is here. Like every candle here took 30 minutes to form and close. Like as we can see here, price is moving. It's like 2:38 p.m. New York just opened. And you can see price moving. If it was just like sit down and relax for a second and just look at this, we could see it's moving a little bit. This means price is still moving because it's New York session and price could actually make a big move right now. So with that being said, all of these time frames mean something. But I want to go to the 1 minute to show you guys this in a more clearer way, so maybe you could understand better. Just like these last two examples, the 1 minute represents every candle had 1 minute of time of opening and closing. And then when that closed, the other candle had 1 minute to open and close. So if we look at this, this candle has only 23 seconds to close. And when that closes, a new candle will open, and then that will have 1 minute of price action. And then when that 1 minute is over, it will go to the next one. These are just time frames. So we have 8 seconds now to see what this candle is going to do after this 3 second here. 2, 1. Now, boom, a new candle opens. Now, this new candle has 1 minute of time to see whatever price does here. Maybe it goes up like this. Maybe price goes up. Maybe price goes up. Maybe price goes down. This has 1 minute worth of time. And when that 1 minute is over, the next candle is going to start moving. Whatever is going to be, up or down. That doesn't matter right now. I just want to let you guys understand this. So these are called time frames, right? The daily time frame, the 4-hour time frame, 2-hour. And I want to tell you, first of all, these initials. HTF and LTF. What does this mean? I want you guys to write all of these down, to write everything I say, especially what I just said you about the candles. HTF means high time frame, and LTF means low time frame. And what is considered high time frame and low time frame? Everything that's going to be above the 30-minute, 1 hour, 2 hour, 4 hour daily are considered high time frames. And everything that's under 30 minutes is going to be considered low time frame. And the 30 minutes, I think, is the middle one. It's not so high, it's not so low, it's in the middle. That's what I want you guys to understand. And if you hear someone else talk about, yeah, but the 1 hour could be this, the 15-minute, I don't give a shit. You're here to learn my strategy and my strategy only. So please stick to what I told you on the first video of this mentorship. Now, why do these candles have like these sorts of wicks, and how do they work? How do they open and how do they close? This is what I want you guys to understand. I'm just gonna make one rectangle here, and I'm gonna make it green, maybe like this. Then I'm gonna make another one to show after this one, which is gonna be red. Now, the green candle represents the up candle. Like price started here, and then if it goes up, it's gonna be green. If it goes down, it's gonna be black. So whenever you see a green candle, as said before, that means the price at that moment, at that particular time frame, went up. And when we see a red candle or a black candle or whatever you have, this represents that it went down. So how does this open and close? Right? When we see a green candle, and then let's say this is the 1 minute time frame, right? And this candle has 3 seconds to, let me just put some wicks here. I'll show you what these are later as well. Let's say we have a green candle. Whenever the green candle closes, let's say the 1 minute is over, now we're going to go to the next candle. Whenever there is a buy candle, the next candle is going to open at the top. So the next candle will open here. And when the candle opens, it usually looks something like small, and then price will maybe go up, maybe go down. And whenever price goes below this opening price, it will turn red. And whenever price is going to go above the opening price is going to turn green. And after that minute, whatever the time captured price doing is going to leave it like that. The same thing, but the opposite basically goes to the red candle. If we have a red candle here, and this red candle closes like this. These are the wicks, I will explain. And the red candle closes like this, right? The next candle after the red candle is going to open at the bottom. And then the same thing, whatever price does, if the price goes above, this is going to turn green. If the price goes below, this is going to turn red. This is how the candles work. And what are these wicks? What are these sticks that I just put here and what we see in the charts all the time? Like, let's go back here. What are these? Let's go to the 1 minute time frame. What are these? What are these wicks here? This is where price went. Price, this indicates, let's say this wick here. Let's say this black wick here. This means that price went all the way up here, but then came back and closed here. So the price couldn't reach and stay to that point. It pulled back, and this is what was freezed in this time frame. This is what price gave us in this 1 minute time frame here. That means that price went up here and then came back here. But whenever it comes back, it will show you where it was. So we know that at some point here, this candle was up in here and then came back here. The same means with the below candles. This means that this candle was down here, was up in here, and then closed here. And now what we're gonna do, we're gonna do this live. So in 1 second, there's a new candle opening. Where did this candle open? It opened here. Why? Because we have a green candle. We have a buy candle, and the next candle opened right here. And now we can see as this goes up, maybe this will leave a wick. Let's see. If you can see here, it left a wick here and then went down. And if it goes below the opening price, the candle turned black because now it has selling power. It started going down. And we will wait until the end of this candle to just see what the price does. And this is what I want you guys to do. I want you guys to go to the 1 minute time frame and understand and actually look at this. Just freeze out, look. And yeah, it's a green candle. If this candle closes here, the next candle is going to open right here. Why? Because this is a green candle. We have 4, 3, 2, 1, and the next candle is going to open right here. Yeah, as you can see. And if the candle goes down, it's going to go black. If the candle goes up, it's going to go green. And these wicks mean that price at some point was here, right? As we can see here, price just wicked down and then went up, which means price went all the way up. It was a black candle at some point. You can pause the video, go back, and then went up. It left a little gap in here, which is all right. That's what happens. It's not, market is not perfect, but yeah, it went up and then down again, and it has 20 seconds to see what price can do on this. And this is how candles work on every single time frame. Now, how can we use these wicks is going to be a totally different story, which will be explained later. I just want you guys to understand this first. This is how every candle works, right? So you see the candle opened below. Why? Because this was a black candle and then it went below. And if it goes up, that means it's green, right? Like it is right now. And if it goes below this line, it means that it's going to be black. This is all I want you guys to understand on candlesticks. This is the anatomy of the candlesticks. Now I'm going to go into market structure. What are the 3 ways? I mean, there is only 3 ways this market moves. There's only 3 ways. I don't care who says it, whatever. This is just a fact. Or let me do this. Number 1. Number 1 is going to be market moves up. Number 2 is going to be market moves down. And number 3 is going to be market moves sideways. Now, what is this? How can we call this move up? Market moved up here. We call this an uptrend because market trended higher. How do you think we would call this? This is called a downtrend. And the third one, it could be called different ways, like consolidation or range. I usually call this a range because price couldn't actually go below this range. So it just went up and down until, inside this range. That's how it's called. For example, market is ranging now. If you hear something like that, you know that market is stagnant, like it's not moving much, it's not going up or down, it's just going in the same place. Now, if you can see here, I actually didn't draw this uptrend like this. Why didn't I just do a move up like this and then here a move down? Because market moves in waves. If we can see here, this is an uptrend, right? This is a clear uptrend. We can see price moved higher. Why? Because this is the starting point, this is the finish point, and which means this went higher, which means this is an uptrend. So, how and why the market moves in waves? Like this. You see, it made a move up, it came back. It made a move up, it came back. Made a move up, it came back. It made a move up, it came back. Made a move up, it came back. And if I just take this brush aside, we can see that the market moves in waves. The market might do something sharp like this, like just punch higher, but that's not going to last very long, right? If the market really wants to go, let's say, up and continue this trend all the way until here, it should move in waves, right? Why? It's going to be explained later. I don't want you guys to worry about that. I just want you guys to know that 90% of the time, if the market is going to go from one point to one point, market is going to go with waves. Market is going to pull back a little and then move up. And how we determine an uptrend? Why is this an uptrend? Like, let's break this down. If I draw something like this here, something that you can notice is that this move up here is bigger than the move down. And then again, this move up is bigger than the move down. And we always create these little mountains and we keep going higher and higher because that first move up is higher than the second one. We still go up and then a little back and then up and little back. This is how a trend gets formed. That was the example with the uptrend. And now let's say we have something like this, which we know now we call a downtrend. How does this work? It's the exact same thing like with the uptrend, but now we know that the move down should be bigger than the move up because now we are in a downtrend. And this will be repeated until it's not going to be repeated. Let's say then until market wants to go up, then the move up will be bigger than the move down. And when we are in a range like this, let's say market is just ranging, the move up usually is going to be the same as the move down because market is still in this. Now let me take you some examples and I want you guys to do this homework by yourself. Let's say I want you guys to go to the 5-minute time frame or the 15-minute time frame and identify 5 uptrends, 5 downtrends, and 5 ranging markets. In this case, you want to do this, you want to do this, and then type here uptrend. You have identified an uptrend. Why? Because the move up is always bigger than the move down. and also price was here and then went all the way up here, which means in a different way, price went from here until here, right? Which means price moved higher. Now, how do we identify a downtrend? For example, we could take this. Why is this a downtrend? Because we can see that whenever price moves down, it's bigger than the price moving up. Then price moves down again, which is way bigger move than the price moving up. And price moving down again and up, down, up, down, up, down, up. If I pull this aside, we could see that every move, almost every move down was bigger than the move up. That's why price was here and then it came here, which means price dropped down. How do we identify a ranging market? Usually ranging market doesn't really happen quite for a long time, let's say, especially in major pairs like gold, and maybe you see futures and other markets, but I'm going to be talking about gold, especially Forex. Why don't we see a consolidation much in gold? It's because it's a pair that's get moved a lot, a pair that has a lot of volatility, right? If you take like maybe a smaller pair or a pair which is not that big, you might see quite often consolidation. It's not that it doesn't happen in gold, it happens quite some time, but not as often. For example, we could see here, this is a consolidation. This is a ranging market, up, down, up, down, up, down. We have green candles, red, black candles, green, red, black, green, black. This was a range. This was a ranging market. Let's see if we can identify different ranging markets. Yeah, for example here, we could see that this was a range, right? Up, down, up, down, up, down, up, down, up. This was just a stagnant market. This was a ranging or a consolidating market. Let's take another example, and while we take other examples, we can see here, this is an uptrend, right? Move up, down, 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 up, down. We move this aside, this is clearly an uptrend, right? But market is not perfect. When I take examples with these, like this, for example, this is far more beautiful, let's say, than this one, right? Market is not going to make just perfect, like, market structure, right? And let's just go and try to identify other things. Let's say from this point until this point, the market was in a range. You see, it doesn't happen as much as, let's say, a downtrend. This was a whole downtrend which had a little consolidation here. Look at the uptrend, boom, it moved up. Look at the uptrend, boom, moved up, boom, downtrend. Maybe a little consolidation here, boom, uptrend, uptrend, uptrend. This is the markets you want to trade. Even if you don't want to trade gold, you want to trade a big trending market. That's for sure, right? What do we have here? Let's say this is like a bigger ranging market. One here, boom, 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 boom. If I pull this aside, this is the moves up and the moves down are basically at the same place. That's why we call it in a range. Now, after you've done this, I want you guys to do that homework I told you. I want you to identify 5 uptrends and 5 downtrends. The other thing I will be explaining to you guys now is highs and lows. That's why I said it's going to be a fairly longer video, so feel free to maybe learn a concept, go practice, because until now I already gave you two homeworks. I want you to go understand the candlesticks, like go to the 1 minute chart, just look at the market for like 15 minutes and see how they close, they open, they leave a wick, they go down. And why do they do that? I want to get back to that because I forgot one thing to say. Look at this. You need to always have this in mind. The market moves by buyers and sellers, right? If the market started here and made an uptrend. What does this mean fundamentally? What does this mean? This means that the people bought more than the people who sold. The people who bought way more than the people who sold. Let's say, if I'm just going to take a random number, let's say 100 people buy gold, but then 50 people sell gold. Who do you think is in charge here? Let's say this is the scenario, 150. 100 people buy, 50 people sell. Who do you think is in charge? Of course, people who bought are going to be in charge. Why? Because there are more orders, there's more money in the markets that bought the market rather than sell the market. So this move up was totally controlled by buyers. And this move down here was controlled by sellers. So you can imagine this as a rope, and the buyers and the sellers all pulling and pushing, right? If the buyers are in control, they start pulling the rope. If the sellers will want to be in control, they start pulling the rope. The whole idea of trading is to find out who is going to be in charge next. Let's say this is what the market is doing. Should I buy at this point or should I sell? This is the only two things you need to master. And that's how we're going to get deeper and deeper and deeper into this mentorship. Now, I'm going to draw an uptrend here. One little practice. Why is this an uptrend? Move up higher than the move down. Move up higher than the move down. Price is continuing to go higher. Now, a high and a low is a very simple, but yet it's a very important part of the whole thing. You're going to be using highs and lows every day, every time you look at a chart. Now, what is a high? A high is going to be a move up, then a move down. The top of that place, the top of that move is going to be a high. What is a low? A low is a move down, then a move up. That the lowest place here is going to be a low, right? Now, let's take what we draw here. Let's take this for example. I drew here a perfectly uptrend, and now we want to identify the highs and lows of this uptrend. Now, how would we do this? Let's think. What was a high? A high was a move up and a move down. Okay, so that makes this a high. Why? Again, because this was a move up and a move down. So this is a high. Yeah. And now, I'm just going to put H, that represents high. Now, what did we say about the lows? A move down and a move up is a low. So we could do L here. Again, this was move up, move down, high. This was move down, move up, low. Now, what do we have next? Move up, move down, high. Move down, move up, low. That's what highs and lows are. So we can just go ahead and put this up here, then this up here. Why? Move up, move down, high. Move down, move up, low. Move up, move down, high. Move down, move up, low. Same here. Move up, move down, high. And now I want to ask you this. Is this a low? This is a move down. Is this a low? No, it's not. Why? Because we need two steps to create a high or a low. A move down and a move up. That's how we can identify the low. We need a move up and a move down. Two steps to create a high. So in this case, this is just the first step being made. Move down, but we don't know, we don't have the move up. So maybe the market will continue to go down, down until it makes a move up, and then this will be considered the low. So in that case, this wouldn't be a low. It's just a little practice and a heads up. Now I'm gonna take the downtrend and we're gonna apply the exact same thing. I'm just gonna make bigger moves on the downside and smaller moves on the upside. And this will create, we will draw this way a downtrend. Now, let me just make this a little more perfect. Now, let's break this down. What do we see here? We go to the start, the first move of that trend, and we can see a move up and a move down. What do we have here? A high. What do we see after that? A move down, a move up. This is a low. A move up, a move down. This is a high. A move down, a move up, a low. A move up, a move down, a high. A move down, a move up, a low, sorry. Then move up, move down, high. Move down, move up, low. Move up, move down, high, and a move down, but we don't have the second part, which would be move up for this to be a low. So in this case, we don't have this as a confirmed low yet. This is how it works on the downtrend. I want you guys to truly stop at every point, at the candlesticks, at the uptrends, the downtrends, then at highs and lows. I want you guys to stop, write stuff down, go do the homework, and then come back and rewatch the concept again. Now, how do we mark out highs and lows in a ranging market? Let's say price ranged here, from here to here, like this. It wasn't something significant, so we know price just moved sideways. It didn't move higher, lower. It started at this point, it ended up on this point, which is the same thing. Now, how do we mark out highs and lows here? The same exact way we would mark out the highs and lows on an uptrend and a downtrend. Let's do this together. Let's see the first move. Always start from the beginning of the move. What is this? A move up, move down, high, move down, move up, low, move up, move down, high, move down, move up, low, move up, move down, high, and then move down, up, low, up, down, high, down, up, low, and so on and so forth. High, low, high, low, high. And now it's not a low yet because we don't have a move up. We already know that. And if the market, for example, is like this, which means this is a move up, down, high, a move down, up, low, a move up, down, high, a move down, up, low, and we have a move up, but we don't have a move down, that's still not a high. The same thing is applied to both of the scenarios. We don't have a high or a low if it's not complete, if we don't have the two steps, which is a high or a low. That's as simple as it gets, right? I don't know why I didn't just delete everything. So, what I want you guys to do now is I want you to use this this tool here, the vertical line, and I want you first to identify an uptrend. Now we're gonna start, let's say we want to do this from here, and then we're gonna do that until here. So you're gonna place two vertical lines and you wanna mark out the highs and the lows in this move up. What is the easiest way to practice and learn to mark out highs and lows in the actual market. Because I don't want you guys to draw something like this and then mark out the highs and lows, because this is not what you're going to be trading. You're going to be trading the actual price, right? So I want you guys to use the brush tool, and we're going to go ahead and draw everything we see here. This is how we will go. From wherever you put the first vertical line, we're going to start. So what do we have here? Move up, a little move down, move up, a move down, move up, a little move, push down, move up, move 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 down, move up, and move down. Now, once you did that, I want you guys to just take this and push this just a little bit higher. Yeah, like this. You just want to push this a bit higher. So now, if you don't know where the highs and lows are, you can just look up. So this is the move up, the move down. Why? Because we can see here, move up, the move down, move up, move down. So this is what makes a high. This is a high. Let me zoom in a little further. A high. Now, what do we have here? Move up, move down. This is a high, which made this point, because if I bring this back, you can totally see this. Or maybe, if you want to, you can select the brush and make it thicker. This way, you could see it even better. Yeah, this is a better way to do it. Maybe use the 3 or maybe the 4. So you can see, this is the move up, the move down. This is a high. Now we have a move down and we have a move up. We're going to mark this as a low. Now, we have a move up and a move down. We have this as a high. Then we have a move down, a move up. We have this as a low. Then again, a move up and a slight move down. That makes a high. And then a move down and a move up, and we have a low. And you're going to go like this and mark out everything. Let's do a couple of more of these so we don't have to do this whole downtrend. Let's say we have a move up, move down. We're going to mark out this high, a move down, move up. We put this low here. Move up, down. This is a high. Move down, up. This is a low. Again, move up, down, a high. And again, move down, up, a low. And now I want to pull this aside. Now I want you to watch and see with eyes, where are these actually marked out? And this is the best way to practice this, right? Because if you're something new, it's going to be way harder for you to know, because maybe this is the first time you start seeing candles, and the next thing you know, we're marking out highs and lows and market structure and stuff, and you're like, whoa, what is this? Take it slow. Do homework by homework. If you just feel comfortable of looking the first part of this video where I talk about candlesticks, and then you move to the next one and it's a little overwhelming, a lot of information, cut. Come back later or the next day and do it again. Watch the second confluence or the second thing we learned, and then come to this, and you want to go slowly on this. Trust me, you're not going to make more money if you go faster. Now, I want you guys to imagine the line you wrote, because the line you drew, because this way, this is how we drew this line, right? Like this. Now, I want you guys to go up and identify every high and low just with the mouse. Like, this is a move up and we have a move down. Okay, that's what made this high. Now this was a move down and a move up. That's what this high was made. Now we have a move down and a move up. That's why we have a low. Now we have a move up and a move down. That's why we have a high. Then again, move down, up. This is why we have a low. Then we had a move up, down, high. Down, up, low. And it's not really important if you miss something. It's going to be totally all right. you will be better at this with practice. But I want you guys to do the uptrend, what I told you here. Like, go here, identify an uptrend. You know how the uptrend now is made. Put vertical lines around it, start brushing it, and when you start going to draw the brush, you want to go a little closer like this, and you want to go slowly. You don't have to rush. You want to go like this, you want to go like this, and whenever you're like this, you know this is a high. And whenever you take this out, you know why was that a high. You start training your eye. That's the whole point. And you want to do this 5 more times. You want to identify all of these, then you want to go to a different uptrend. Now, let's do this in a different uptrend. Let's take this small uptrend here, like this. After we did the vertical lines, we're going to start drawing the moves. So what was this? This is a move up. Now we had a move down. This is a move up. We have a move down. This is a move up. We have a move down. A move up, a move down, a move up, and then a move down. Now, just by this, you might already know where are the highs and lows right now. If you don't, that's totally fine. But some of you, I bet some of you knows. Like, move up, move down, high. Move down, move up, low. Move up, move down, high. Oops. Move down, move up, low. Move up, move down, high. Move down, move up, low. Then again, high. Then low. Then here is the last high. If we take this out, the brush that we drew, now the last part is analyze. Start going with your hand. Why was this marked out as a high? Because this was a move up and then it had a move down. Okay, if you're unsure, don't delete the drawing like this. If you just drew this, just put this aside, and then if you don't feel why, if you don't have the correct answer, like why did I have an uptrend, a high here, just get this back and put it on the place you first started to draw. And then you will be like, oh, okay, so this was the move high and the move down. Okay, then you can move that aside and this will be more understandable to you. This is how you want to approach highs and lows. And if you do this 5 times on an uptrend, you're going to do this 5 times on a downtrend and then 5 times on a consolidating market. Now, I'm going to take an example on the downtrend. Let's say from here to here, we see that market dropped. Now I'm going to take the brush and I'm going to go move up, move down, move up, move down, move up, move down. You don't have to be perfect with this, guys. I just want you guys to understand how highs and lows are made and how to identify them. Move up, move down, 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 move up, move down. Now, once you have all of this, this is going to be fairly easy because now you know up, down, high, low, high, low, high, move up, down, high, move down, up, low, move up, down, high, move down, up, low. It's very simple, I guess. Now, I think you guys should be understanding by now. Then again, it's a low, high, low, high, low, high, low, high, low, high, low, high, and the last one's the low and the high. Now, pull this aside, and if you want to get back to this, just make sure you grab it from here and put it from the starting point, and it will be exactly on the same place. Now, I want you to go with a free hand. Why did we write a high here? Because we have a move up and my price went down. So that's a high. We have a move down and then price went up. A move down. A low. A move up. A move down. That's a high. A move down and up. That's a high. And some of these highs or lows are going to be more easy to spot than other ones, and that's totally fine. That's something you need to practice, and you need to have the experience with the highs, with the lows, and with the market itself. So for example, what do I mean by that? This is a very simple and very spottable, you can spottable, you can spot these lows very easy. And in this case, move up, down. This was a very easy high to spot as well, right? So then this is a very easy one to spot as well. This is an easy one to spot. Maybe what would be hard would be something like this. Move down, move up, then again move down. Maybe this is a high which you could have missed, which, by the way, it's totally fine. You're in the first day here, so it's not expected for you to know everything. Now, you're gonna have 5 different uptrends, which you're gonna mark highs and lows, exactly how I showed you. Then you're gonna have 5 different downtrends, which you mark highs and lows, the exact way I showed you. And you're gonna find 5 ranging markets, like this. Or let's do it how we did everything else. Put this, and you could just see inside this is just a ranging market, right? Because the prices went up and down. And we're gonna go break this down. Move up, down, 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 up, and down. This should be fairly easy to draw after. I mean, the highs and lows should be fairly easy to spot after you drew this one. High, low. Move up, down, high. Move down, up, low. High, 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 low, high. And this is not yet a low. Or if you could say this move up made this a low. Now, if I pull this aside, we can see highs and lows marked out. Right? This was the high because you want to go with the free hand, just like you did in the other examples, like up, down, up, down, up, down. This is the high. Down, up. This is the low. Up, down. This is the high, and down, up. This is the low. Up, down, high, down, up, low. And you want to do this in 5 different ways, in 5 different ranging markets. If you did this one, you marked out everything, you took out the brush, and you started analyzing by hand. Once you did that and you confirmed everything, you want to delete that. You want to go to the next ranging market. You want to spot a ranging market. You want to put 2 lines from the beginning to the end of it, and you want to start drawing that. You could be doing by this as well. You could do this. This tool can be found here. This is the path. But I think doing it by brush could really start getting you to draw it and to know it better. So this is it for now. I'm not going to push this video any further because that was already a lot of information. So I want you guys to look at this. Please repeat this video how often as you would need. Because maybe you watched it 2 times, you wouldn't understand. Watch the 3rd time. And maybe you can comment and ask something. And if I have the time to, I will reply. So for now, I'm not gonna push this any further. I'm not gonna be doing any other thing. So this is it for today. Totally. This was too much already. So make sure you just repeat and learn everything before you go to the next video. I thank you guys a lot. I hope this was helpful. I hope I was clear with everything I'm teaching here. And I'll see you guys on the next video. Thank you guys for watching.